All right, welcome to episode 1 of the Central Valley Mortgage News Podcast. My name's Chris Hall. I'm with Rate Mortgage, and I've been in the business for 25 years, mainly covering the Central Valley of California. So Central Valley home for me is Ripon, and really my main territory would be Stanislaus County, San Joaquin County, really Modesto, Turlock, Manteca, Ripon, Stockton, Tracy, surrounding area for the most part, although I can lend anywhere in California, and really our company covers all 50 states. So this information I want to bring you today is about a loan program that's fairly new to the mainstream. It's not something that has been around for a long time for most mortgage companies, although at Rate we have several different options. And what I want to talk about is the DSCR loan. So probably heard of that if you are searching for investments, if you have done an AI search for, how do I buy investment properties, or what is DSCR financing? Well, I'm hoping to answer some of those questions for you in this podcast, in this video. So DSCR financing, DSCR stands for debt service coverage ratio. Okay. So in English, really what that means is the rents for the property that you're buying have to meet or exceed the mortgage payment, the monthly payment, really the total monthly payment for the house. So when we're talking about mortgage payments and monthly payments, we do include property taxes, homeowners insurance, principal and interest on the loan. And if there's HOA dues, those are included as well in the housing expense, right? So the rents, the market rents, have to exceed the payment or meet the payment. You can really be pretty break even according to market rents and still qualify for most DSCR programs. All right. So how do you qualify for DSCR? What do you need to do? Well, most of the time in the Central Valley, you're looking at probably entry-level homes or duplexes, 3-4 unit properties, residential properties to rent out to people. And then you're going to have enough of a down payment to make sure that that mortgage payment doesn't exceed what the market rents are. So when we're talking about market rents, how do we determine what market rents are? There's a few tools that you can use. Some publicly available tools would be like Zillow Rents. You can go online, look up a property address, and get a roundabout idea of what market rents are. From experience in this area, we see single family homes renting for anywhere between, say, on the low side, $1,500 or $1,600 a month. The higher end homes, can rent for more, obviously $3,000 or $4,000 a month. Your moderate entry level, 3-2, which is kind of the sweet spot for a lot of investors, probably going to rent for somewhere between $1,800 and $2,400 a month in most neighborhoods. There's exceptions, of course. So how do we really determine what market rents are? You can use the tools to get a basic idea of what rents are. You can talk to real estate professionals, and I can connect you with some of the best in the area to help with these programs, to help you be a real estate investor. And let me just talk about how important that is. I deal with real estate agents all over the valley, and there are dozens of great ones, and I'm happy to introduce you to some. You really want to make sure that you're working with somebody who is familiar with the market. That kind of is a given. Familiar with how rental properties work, what rents for what. So maybe somebody who's got a little bit of rental experience themselves would be helpful, I believe, because they're going to be able to guide you, especially if you're a first-time investor. But the DSCR loan is geared for that, right? So when you're working with a good team, a good lender who understands the program, and a good real estate professional who also understands the program, you're going to be more likely to be set up for success. Okay, that's kind of my talk on what I believe is important when you're out shopping for a home. But the nuts and bolts of the loan, again, your principal and interest, property tax, and homeowners insurance just need to be lower than your mortgage payment. So, or lower than the mortgage rents. Okay. So the rents are actually determined. So when we get into the financing part of it, we order an appraisal of the property. So the appraiser is not only looking to make sure that you're buying the house for the right price, they're also going to do what's called a market rent survey. Okay. So it's part of the order with the appraiser. They understand when they go out that they're doing a loan, or we're doing a loan for somebody who's purchasing the home as an investment. And we need a survey of area market rents for similar homes in similar condition in a similar neighborhood, really. So they're going to provide comparables of rents along with comparables for recent sold properties. So it's a little bit more involved appraisal. The turnaround time can be a little bit longer because you have to find the right appraiser to do it. We can't specifically assign appraisers in our business, but we do have a pool of appraisers who are very familiar with the program. So that's the main thing, right? The appraiser is going to really set the market value for the rents in the area. What's very helpful, I'll just give you a pro tip here. When you're going into being a real estate investor, and if it's your first investment property or it's your 10th, you want to be able to plan for the unexpected, right? So maybe the market rents come in slightly lower than what we hope for. You need to have enough money available to cover that gap. In other words, let's say that we're financing your house and it's a $400,000 purchase price and you're putting $100,000 down, right? 20%, 25% down. Minimum requirement is going to be about 20. And really, we're going to run the numbers for you with taxes and insurance to make sure that we're in the right ballpark for what we think market rents are. But we always want to plan ahead for, hey, if something is going to be, if it comes in a little bit low, we need to be able to have a little bit more money because you don't want to get caught in escrow and not be able to close your loan, right? So that's number one. That's part of the planning phase. Make sure we have a little bit of wiggle room, right? And then the other advantage of being a DSCR finance loan as opposed to, say, a conventional finance loan is we're just strictly looking at the subject property. The house that you're buying is really all we're looking at as far as qualifying goes. So let's say you've got a pretty complicated financial picture. You do, a few side jobs and, your tax returns are spotty at best, right? You are buying a house that's going to cover the payment's going to cover the rent. So we don't look at the tax returns. Okay. We're not looking at your pay stubs. We're not looking at W-2s. We're not looking at your overtime. That's not part of the equation. The simple fact is we are looking at, as a lender, any lender, I say we, but let's say any lender who's doing a DSCR loan for you is going to look at your payment history, right? You have to get good credit. They're going to look at payment history on any mortgages that you might have. So if you own a few homes and you have mortgages on them, we're going to need information about those. Okay. We're going to make sure that you've stayed current on property taxes, right? We want to make sure that you're used to, paying your taxes and used to paying mortgages. But what we're not going to look at is your W-2s, your pay stubs, your wife's pay stubs, your partner's pay stubs. We don't need that information. We are going to look at the bank statements, make sure that you have enough money in the account to cover your down payment. But any other kind of deposits or anything like that, outside of abnormally large cash deposits that can't be tracked, you've got to be careful about those. But we're not going to scrutinize your financial picture very much. Again, it's not a, hey, everybody gets it as long as you have enough money. Like, we still have to have good credit. What do I mean by good credit? So minimum credit scores probably going to be, 680 or above for a program like this. And the higher your credit score, the more flexibility you're going to have, the more options you're going to have, the lower your interest rate's going to be. So high credit helps. If we need to work on a plan for getting your credit up, something we can help with as well. But DSCR, great. It's only for investment properties. You're going to have to sign an affidavit that basically says, I'm not going to use this property for personal use. It's not going to be my own personal residence. My family's not going to live in it. It's going to be business purpose. It's a business purpose loan, meaning it's going to be a rental property, an investment property for you to own. Couple of little niche things with the DSCR program that we offer is you can get a lower interest rate by hanging on to the loan a little bit longer, right? So you can opt to have a prepayment penalty. And that sounds kind of scary, but we can go over those options with you. It's just, but it could be Sometimes you'll look at online for DSCR financing and you'll see a super low rate, but they won't tell you in the fine print, or maybe it's somewhere buried in the fine print, that that loan comes with a 3 or even a 5-year prepayment penalty. So be careful of that. I don't like to stick people with that long of a term, right? But the loans themselves, you can do a 30-year fixed a lot of times. I'll even do a 40-year fixed for people with a DSCR loan, because again, that's bringing down your monthly payment, and that helps to ensure that that rent covers that mortgage payment. If you have any questions, leave a comment. My email address is available here in the chat log. So I look forward to helping you, your investor clients, with DSR financing. It's not a scary loan. We do them. Probably 30% of my business right now is DSCR financing, which that wasn't the case 5 years ago. So again, Chris Hall with Rate Mortgage. Thank you for listening.